you have to cover the loan amount or whatnot. But definitely should not be a deal breaker, because there's laws, preventing that. Market value, appraised value, tax value, all those do not take into the consideration the rebuilding of the house. Is mostly like what you can buy it for or sell it for. And again, that includes the land.
Got it. So when we look at, when lenders, obviously when you're going through your loan process, lenders do have a requirement for the coverage, right? You honor that. Obviously, that's something that the questions that you ask regarding what that coverage is. And especially when you're purchasing, say you're doing a cash purchase. So you work with investors as well.
Yes.
So around that, when you're looking at, if you are an investor and you're looking for an insurance company and someone that understands exactly what it looks like, because, a lot of times investors are purchasing cash.
Yes.
So requirements and lenders. So share with us a little bit about what that is. I know appraised value again goes to appraisal district, Harris County, compared to I say that's for property taxes. And then you have the appraisal value that comes over from the appraisal that goes to the lender, right? So share a little bit about the investing side of things and what that means for investors.
Well, investors definitely look at a property much differently than somebody that's going to live in the home. They look at it more of a business, profit and loss type thing. And the people that are backing the loans for these investment properties are really just looking to make sure that the loan is going to be taken care of. When we're dealing with a property that is usually on a lower end, like we just had one a couple of days ago where the house is a 1,500 square foot house, the loan amount's $55,000. The investor obviously only wants to cover the $55,000, but not many people talk about those little insurance clause that are often built into these property or home policies. First of all, that co-insurance clause usually is a minimum of 80% in the state of Texas. Insurance companies can choose to do 90% or 100%. A lot of people don't know that these policies have an insurance clause. And basically what that clause says is that in order for the insurance company to insure 100% of the claim, you have to buy a minimum amount of coverage for that house. So say you have a house that's $100,000 for replacement costs, and you only buy the co-insurance clause is 80%. Obviously, you would need to buy at least $80,000 for the house, right, to cover it. But say you have an investor and says, "Oh, I only want to insure it for $70,000." Well, there's obviously a deficiency in the amount of coverage that he's buying, right? So that claim ends up costing more than his deductible, because what the company will do is they'll calculate what that factor is of deficiency, and they're going to apply that towards what the payout would have been. So they do that way before they calculate they minus the deductible. So what could be a $2,500 deductible turns out to be maybe $6,000 or $8,000, depending on the loss of the claim.
Got it.
Simply for not meeting the insurance clause.
Right. So again, I mean, these are things that you have to be mindful of as a homeowner. If you're wanting to, like I said, invest in a property, so you want to make sure you have coverage, because the last thing you want to do is to purchase a property to flip it and, turn it in 90 days and, something happens, God forbid, something happens and you don't have that coverage. And here you've put that much investment into it, obviously to turn a profit.
Right.
They get eaten up by.
The other thing I want to touch on is making sure that you have, I totally lost my thought. It was just right there.
Oh, that's right.
I'm sure to come back.
We have 2 other mistakes to go over, so no worries. So I'm going to reintroduce ourselves, because I realized within StreamYard it did not connect. When we had that little.
Oh, yes.
So I had to reconnect us in. So I'm just going to do a quick re-intro for us and everyone that's watching. Thank you so much for watching. You're watching the Briggs and Mortar Heights show. It's going to be bi-monthly. So first Tuesday and third Tuesday of each month is going to be Talking Tips Tuesday, things around real estate and potentially other fun stuff. And today we're with Branda Castillo. She is the broker owner of Castillo Insurance Solutions. So we're going over different tips. I say tips, but free mistakes that she has found over the years as she has provided insurance, homeowners insurance. And the first tip, we were just kind of going over the difference between appraised value and as well as compared to replacement cost, right? So that was kind of mistake number one.
Yes.
So mistake number.
I do want to.
Go ahead.
I'm sorry. I wanted to point out what I was going to mention about these investors. Oftentimes, we'll get an investor that buys a builder's risk policy because they're working on the property, and sometimes they'll buy, for a year long, and then they're done working on the property. The property is vacant. Maybe it's for sale. That builder's risk, once that project is done being worked on and the property is just vacant, that builder's risk is pretty much void. So what I've been hearing happening is that they're buying these policies, the builder's risk, and then the property's vacant, up for sale, and it's been like that for a couple months, and then there's a claim and the builder's risk doesn't cover. And that's because once that construction project is done, that builder's risk is pretty much null and void. Just because it's sitting there vacant, you definitely want to switch that over to like a vacant dwelling policy, or a policy that allows for vacancies, because again, the builder's risk, once that property is done being worked on, that policy is pretty much ceased, despite the fact you may have bought a 12-month policy.
Got it. So if you get it's a flat rate, and if you're done with the build, if you will, in 6 months, is there a credit back, or is it just a flat rate?
Yes, you can. Most builders risk policies, especially when they're in a non-admitted market, they're going to be about 25% earned plus your fees. So that stuff you're not going to get back. That's usually about the first quarter. We do offer month-to-month policies. You can buy like a 1 month, 2 month. We had a church that, they didn't know when it was going to be done. They just kept, for like 6 months, they just kept going month to month, and that's definitely allowable. Again, you want to make sure your lender, and this is where your lender needs to kind of understand and be educated on it also, because we'll see lenders that'll come and ask us for things, and we're like, what are you asking for? Like, I can't make these work in a policy. Like, let me call this person. I had to spend about an hour or two talking to a lender about like, okay, we can't put replacement cost on a builder's risk, and a builder's risk is not on a policy. Like, he had asked for a vacant builder's risk with replacement costs and no co-insurance clause, and I'm just like,
I do not know if that's the weather or what. Yeah, so it's okay. You know what? Because Brenda and I about a year ago did one of these shows, kind of having a conversation and get about insurance, and in the middle of it, her chair dropped. You remember that?
Yeah. Like I'm not in one of those chairs. I'm in like a.
And then you brought it back up and you continued talking. You covered it so well. You were so gracious, and boom, it dropped again. I'm like, girl, just leave it. We had a good laugh on that video. Oh my gosh. All right. So mistake number two is not buying flood insurance.
Oh my God. Yes.
Oh my gosh. I'm going to share a story before you start telling us exactly what's up with that. So the reason I'm so passionate about it is because I used to.
Uh-oh.
So we were about 4 blocks away from the flooding. And at that time, I was already moved into the Heights. My dad was living in my home. And I told my dad, I'm like, I don't care about the house. I mean, I have flood insurance. Let the house go. I mean, where we lived, we were like 4 blocks away from the fire station. I said, if you need to, just take your time, go to the fire station. They'll take care of you. Because I was in the Heights. I couldn't drive to Bear Creek. It was flooded out. So flood insurance, I was not in a flood zone. It's very cost effective, in my opinion, if you are not in a flood zone. So share that mistake about people not getting flood insurance.
I actually just went through this morning. I had a client call me about renter's insurance, and he was like, okay, it's just been raining so much, I want to get flood insurance. I'm like, oh, wait, this is not covered. So flood insurance, a lot of people tend to think, oh, it won't happen to me, or I'm not in a flood zone. That's usually like the number one, I'm not in a flood zone. 25% of flood claims are from people that are not in flood zones. Houston, a lot of people were not in flood zones, and look what Harvey did to everybody. So it doesn't discriminate. Just because you live in a flood zone doesn't mean you're going to flood. And just because you don't live in a flood zone doesn't mean you won't flood. So nowadays, we have more options available to us other than just FEMA. Everybody knows that FEMA is usually a 30-day wait. Their policy can be a little bit restrictive in the sense that it doesn't cover like for you to go stay somewhere else if you can't live in your home. Other structures is usually just a 10% limit that's built into the policy. So if you have like a detached garage that has like on it, as you see the apartments, right, you want a separate flood policy for the main house and the garage apartment. Nowadays we have policies with a 10-day wait. That's one of our popular ones right now because the 10-day wait is a much better waiting period than 30 days. This particular policy,
especially, I apologize for cutting you off, but especially when you see something forming, like there's a possibility something's coming in the Gulf and you don't have it, you better get it. Yep. Because you still have that wait period. You still have that lag, right?
We are going to be closing one in 45 minutes for that reason. He's like, I see a storm coming. Is this still available? I was like, yes, 10-day wait. And the cool thing,
you would cut that off, right? Once the storm gets in the Gulf, you can't call your insurance, right?
Flood insurance is different. Flood insurance is different because under home insurance, we can make it effective, available the same day, right, on home insurance. But flood insurance, you got the 30-day wait unless it's a lender required. But on with this 10-day wait is still like the 10 days. And once in a while, if there's a heavy storm that looks like it's going to go beyond the 10 days, I've seen them like hold off on issuing. That happened early on last year, but yeah, these non-FEMA policies or these private flood insurance policies can have a lot more coverage. This one we can add pool coverage. This particular client's adding a pool, and that's one of the things that he's looking for. The other thing is that you can carry more than what FEMA. The maximum you can buy with FEMA is $250,000. This client's buying $550,000 for his house because that's actually what his house would cost to replace. Nice. So it'll cover, if loss of use. So if you can't live in your home, you can stay somewhere else, things like that. It'll cover replacement costs, things like that. So, and pricing is not usually, it's a pretty competitive price policy. The other thing is that we now have a home policy where we can bundle a little bit of flood insurance into the home policy. Coverage usually starts at about $5,000, but you can have it all the way up to the coverage amount that you purchase for your house. And that is definitely a big perk on this particular policy to be able to do that.
Yeah.
And then one thing I do want to touch on, flood mapping. They're constantly changing maps.
Yeah.
So you definitely want to ask your agent, because sometimes if you were not in a flood zone before and then suddenly you're in a flood zone, if you have a mortgage, your mortgage company is going to let you know, because then they're suddenly going to require flood insurance. I strongly recommend making the cost of having an elevation certificate. You're probably going to pay about $350, maybe $400 for an elevation certificate, but it can definitely help reduce the cost of your flood insurance.
Yeah. Well, especially when you're buying your home, if you are in a flood zone, even if you're not in a flood zone, your title company can order the survey and elevation at the same time, and they give you a discount. Okay. So kind of, because if they're doing two things at once, they're at the property at one time, they're knocking it out both times. It's when you order a survey and then 3 weeks later, they're saying you need an elevation cert, the company can go out and charge $400 or $500.
Yeah.
Right? It's just something to be, right, as you said, mindful of, especially when you're buying. However, if you currently own and you do not have flood insurance, think about, if you were here when Alicia came through, tax day flood, Memorial Day flood. We have them. It happens. We're in Houston.
Mm-hmm. Yes. And
we can't do anything about her.
Yes. And if you just got put into a flood zone, ask your agent. Sometimes there's like certain credits that you can get, because sometimes, like, say you're not in a flood zone and then you're newly placed in a flood zone. And so the FEMA will like gradually increase your premiums to meet up like what the market is, but they'll usually do it like at 5% of the time. So they're not like banging you with a whole like flood rate all at once. But sometimes, throughout the years, those rates can get adjusted depending on where you're, like how they adjust your flood zone during the remapping process.
Yeah. Yeah, you got to keep an eye on that stuff. We definitely, what I find quite a bit when working with home buyers is, a lot of times they say, I don't want a house that's flooded. Don't even talk to me.
Yep.
And we're required as realtors, listing agents, we're required to put that in there. It's in the seller's disclosure. The seller's disclosure change. There's a whole section about flooding if your home flooded. So you can't, man, even if you got 1 inch in your garage during Harvey, didn't get into the main house, you still
have to disclose.
Yeah, because you don't want something to come back later and it's a liability that's not necessary.
Yeah.
All right. So mistake number 3. I got my little cheat sheets over here. So all right. So and you know what, anyone, Branda's going to put her information below, but if you totally relate to the stories with Harvey and all that, #flood, put that below. If you're wanting a quote, #flood, we'll definitely, and if you're watching this on replay, just put #replay flood. Branda will get a hold of you.
Yes.
No, you don't have to worry about dialing anybody's number, finding out her information, doing any of that. All you have to do is put a #flood and she's got you covered. All right. So last but not least, and I do truly believe that this is the number 1 mistake, and it's one of the most important topics to really go over. And number 3 is not having an insurance agent. And I want to add another level to that. It's not having a local insurance agent, right? Who in the world, is Utah insurance rate going to remember Harvey, right? You lived it. You're here.
Yes.
So tell us why that's a mistake.
Well, first of all, you definitely want to deal with an agent that has lived in your area, that's familiar with your area. If you're dealing with an agent or even a company, because sometimes we'll see new companies come in, and not to say that they're good or bad companies, but sometimes they don't understand the risks involved with insuring a zone that's prone to hurricanes. We had a company come in from Colorado, had a great policy, priced great, but in this market, it didn't do very well because our pricing didn't really match what the risks were. We work with companies from Florida, and we like working with them because they know what it's like. They're dealing with hurricanes almost every other week, sometimes on the year, right?
So lives in West Palm. I get it.
So that's one thing. But even having an insurance agent that's local, because they know that certain areas of the city are going to cost more in insurance. And sometimes we get those questions from especially new home buyers or investors, like, hey, what's insurance rates like this over here? Or is this in a flood zone? And if you're talking to an agent that's not from here, they're not really going to be able to tell you, hey, you know what? Pretty much anything in the Heights is you're going to be in a bowl, or over here, and in spring you're going to be a little bit more.
What's called the Heights?
Yeah, that's like when they named Greenland Iceland, and Iceland Greenland is just to throw everybody off. But I mean, I love the Heights, but yeah, I mean, there's times we've gone to see properties, and there was like a backyard I went into where the bottom of the yard is here and the bottom of the next person's yard is here. So that person's like yard was like literally like a bowl to the people around them.
Oh no.
And I was like, I would hate to have that, but like, I don't know. It was one of the last properties purchased in this particular development. I really see why, because of that backyard. But yeah, you see that a lot. And so an agent that's not from here is not going to not really have those insights on that.
Mm-hmm. It's true. And we had, just to share another story, to add to the conversation is, I referred a client to you and he chose a different insurance carrier. It happens, right?
Yes.
And well, then something happened. Well, then he calls me and, as his realtor, I'm like, what's going on? Share with me what's so, and he's just like, I got this check back. You got a check back from the insurance company. I thought, oh, well, I had that personally happen to me. Won't use that company again, where they chipped off a piece of my policy and sent me the check for the endorsement. Right. Didn't tell me anything about it. Try to get a hold of my guy. He didn't answer, and not using him anymore. So, anyway, that was before you. Anyway, so, I got on the phone with who? You, and going, what is going on? And we had a conversation. I got him on the phone. I got you two connected, and you did an amazing job because
Thank
that check, they literally canceled.
you.
I'm like, I don't know if you can hear me when it's twirling.
No.
So, the insurance, the person that referred that insurance agent to him, I couldn't even reach her.
Leo.
All right, Branda.
Yes, hold on. Okay, sorry.
I was in a really great story.
I know, I totally missed it. Now you're frozen again. Let me see your mini.
Okay. So the whole point of the story is you were on your cell phone number, you're a dial away. So
Yes.
I can't that to me made me as a realtor look like a rock star, of
Well,
course.
I try.
Made me look like a rock star. So thank you for that. So it just
Of course.
just reiterates how important it is to have someone local that lives and breathes the community and knows what it looks like, right? Knows what it looks like. So let's go ahead, and since we're having such a bad connection, gosh dog it, we're pretty much at the end of it anyway. So again, this is Branda Castillo with Brand A Insurance Solutions. Today she shared with us on her Tips Tuesday 3 mistakes that are made when purchasing insurance, right?
Yes. Home insurance.
Branda Castillo, yeah. 3 homeowner insurance mistakes. All right, making sure that you have insured your home for real estate value rather than the cost of replacement. Mistake number 2 is not buying flood insurance. Buy flood insurance.
Yes.
And mistake number 3 is not having an insurance agent, a physical body that's a cell phone number dial away. So having someone local is really important.
Yeah. Another thing I want to add about having a personal insurance agent is the reviews. You're going to have someone on your corner that's going to be reviewing your policy. I had a commercial account where he had a Florida agent, and after reviewing his policy, he was overpaying about $1,500 a year. And that, when you're a small business, that's a pretty good amount of noticeable income that you could be saving. So local agents will tend to go to bat for you and review your policies and make sure that everything's in line.
That's true. And you can go have a cup of coffee.
Yeah.
Wine.
Oh,
and really
yeah.
get to know them, right? Because at
Yeah.
the end of the day, we're a reflection of each other
Yes.
and our partnership, right? When it comes to,
Yeah.
and like I said, and having you, just to call you and say, hey, this is what's going on with my client, what does that mean? You can't help that. And if you are a
Yeah.
current homeowner, be checking your policy
Oh
annually,
my God.
annually,
Yes.
annually, because it ticks up, ticks up. Okay, so
Yes.
we are, hashtag annually in the, below hashtag annually, and Branda will reach out to you and review your policy. Correct me if I'm wrong. To to see, I mean, you could be paying way more than what you need to, and
Yes, especially if it's been a while since you've reviewed your home insurance. We had a client, we didn't move her because it's the situation that she was in, right? For her particular situation. So because we couldn't duplicate her policy the way she needed it to be, we didn't move it. But once her situation changed, we noticed that her policy, she went from 160,000, and each year your policy has an inflation factor, usually about between 2 and 4%. So it'll automatically increase that coverage amount of your house by about 2%. And as it's increasing, those underlying coverages that are based on percentages are also increasing. And then you'll notice your insurance going up. And then before we knew it, or by the time we reviewed her policy, she was about 40,000 more than what we had initially started. When we redid it and rewrote the policy, she was back down to about 167,000. So she was basically overinsured, and that happens a lot. Some insurance companies don't always budge on bringing that number back down. So it's definitely a good idea to review that, and possibly other carriers if they're not willing to budge and bring that down.
yeah, something to look at. Something to look at.
Mm-hmm.
All right, you guys. Thank you, everyone. My name is Michelle Briggs with Strata, Texas. Like my Facebook page, follow me on Instagram, pretty much all social media. All you have to do is search for Realtor for You, RELTR, the number 4, the letter U. I'll place my information within the comments below as well. So just in case if there's somebody that that's thinking about selling their home and wanting to know what it really looks like, or someone that's looking to buy. I mean, right now it's a seller's circling. I keep doing that. If there's look really. You see me, I'm like, okay, I'm ready. All right. So with that being said, maybe there's something going, I mean, really something going on. Anyway, again, thank you, Branda, bringing my
Thank you.
experience, sharing that with us. You're very knowledgeable and very gracious, and I love you.
Oh,
And
thank you.
and if there's anything that I can do for you, please let me know, and we'll go from there. So until
Yay.
Thursday night, if you want to be with us Thursday night, we're doing the Tasty Thursday with Tatiana. She's a wine consultant, and we're tasting a Pinot Grigio.
Oh,
It's
yeah.
yes, at 6:30. So that's the fun one. This is the business one. Thursday nights are the fun ones. So
Woohoo, I'm gonna let my hair down.
yeah, I know, exactly, right? All right. Mwah. See you guys later. Thank you so much.
Bye.
I'm a Realtor
Thank
for You,
you.
RELTR, the number 4, letter U. Bye, guys.
Bye.